All righty, Jason. So we are on week 2. And so today what we're going to be going over is price movement, how price moves, and because there's specific ways that price move. We're going to be identifying support and resistance and the trend line. That's what we're going to do today. And we're going to have homework for the next time we get together. So your homework is basically going to be to identify support and resistance and to mark up 10 charts where you've identified that. And I'll go over that once we get to that point. So on the trading view, we're gonna start there, and then we'll flip over to MetaTrader 4. Now, with price moves in 3 directions. That's all price does. It doesn't matter what you're trading. It doesn't matter what time you're trading. Price always moves in 3 directions. Now, it's important every time that we go to the chart that we ask ourselves 3 very, very important questions. And these questions you want to put by your computer so that it can usher you into the analytical mindset that you got to have when you're looking at the chart. The first question that you always want to ask yourself is, where am I? Now, I repeat this like over and over, and because I do this on my coaching, but it almost feels like I already went over this with you. Have I?
I'm not sure.
I don't know yet. Maybe not, because
I don't remember seeing this.
Yes, it was because I did it today. I say this so many times. Yeah. Where am I?
I like this platform. It's a really good one.
Yeah. And the next question you want to ask is, how did I get here? And then the final question you want to ask yourself is, where do I go from here? Now, it's very important because when you're able to answer these questions, you'll always know where you are in the market. And as a trader, it's extremely important that you always know where you are in the market. Because if you don't know where you are in the market, you're bound to be on the opposite side of price. And that's the one place you do not want to find yourself, on the opposite side of price. Because if you're on the opposite side of price, you're going in the wrong direction, right? You're going in the wrong direction. You're losing. You're losing at that point. So where am I? Where am I refers to price, of course. Where is price right now? And you're looking at the active candle or the last candle. What is it doing? What is price doing? That's basically what you're asking yourself. And then you want to say, well, how did I get here? Whatever it's doing, what happened that led to that? And then, of course, you want to ask, where do I go from here? Meaning, how do I get in the trade now? What position do I take? Now, in order to answer these 3 questions, you must absolutely know what the trend is. Absolutely got to know what the trend is. Now, identifying the trend is the second most difficult thing traders have, which contributes to the frustration and the loss. Because if you don't know the trend, you really don't know what direction price really want to go in. Now, the reason it's important that you know that is because price moves in 3 directions. An impulse, whether it's a bearish impulse, meaning downtrend, or a bullish impulse. Now, the impulse is in the direction of the trend. So you see why it's important that you know what the trend is. The impulse is in the direction of the trend, always. After the impulse, price corrects or pulls back, either one. You'll hear either one of those terms. So if you are in a bullish impulse, then your correction is bearish. It's just the opposite. After price corrects, it goes back into a continuation in the direction of the impulse. And this, come on, guys. I'm sorry. Come on, be nice. Now, so when you get when you have a correction, that's a beautiful thing for a couple of reasons. One, I'm just gonna make my impulse down here, and then I'm gonna make my correction this way, and then I had to rearrange that. Then I'll make my continuation back up. Okay. All right. Yeah, my clicker's just been doing double. It would put it on here twice, and that's what's slowing me down. Disregard that one. Okay. So basically, you have an impulse, whether it's up or down, bearish or bullish impulse. And then you're going to have, after impulse, you have a correction. Okay. And then after correction, you have a continuation. And the continuation is always in the direction of the impulse. And that's what market does all day, every day. That's how it moves, right? And I'm going to show you on the chart. If this moves out of my way. Okay, so.
Impulse, correction, continuation.
Yep, and it just recycles. It keeps saying it. Now, the impulse and the continuation is the same move. The impulse and the continuation is the same move. So, so if we're able to identify the impulse by the trend, we know that the continuation is going to be in the same direction of the trend, right? So let's look at it from on the chart. Now, let's just assume that this move up is our bullish trend. We don't know that for sure, but for training purposes, we're going to use this. Okay. So the reason it's bullish is because you see price going up, right? And we're going to talk about trend lines. So price this is going to be the trend. It's going up. So after a impulse, which this becomes an impulse, this is the impulsive move. This move up is the impulsive move. After that move has reached a certain point in price, it's going to correct itself, meaning it's going to pull back from that up movement to a down movement. That's called the correction. Now, after it corrects itself, it goes a certain point in price, and then it turns right back around and continues right back in the direction of the impulse. Okay.
Correction. Okay. Just give me 1 second. I got a question.
Sure.
Continuation. All right. So we're saying that we're going to see an impulse, bearish or bullish. Mm-hmm. We are then going to see what's called a pullback, a correction, or a retracement.
Yes.
Is that correct?
Absolutely.
Pullback, correction, retracement. Good. And the correction then is going to then set off pretty much a bounce, right? A bounce back up into an impulse.
Absolutely.
Which is called a continuation.
Absolutely. And you can call it an impulse if that makes more sense, but it's the same move. So that's exactly what it does. Now, so sometimes what you'll see is where price will just go impulse, correction, continuation. But oftentimes there is a little consolidation between the correction and the continuation. So look for it, because consolidation is the beginning of a flag pattern. And that's important too. Consolidation is the beginning of a flag pattern. And okay, now when you have
what do you mean by a flag pattern?
yes, so when you have a flag pattern, that is the flag pattern confirms the impulse, meaning the flag, when we have a flag pattern, what it's telling us is price is still a strong momentum in this trend. It's not exhausted itself. So it just tells us that price is going to continue in the direction of the trend. So when you see a flag, that's what that flag is telling you. And so with that being the case, it's basically confirming that price is about to turn around and go back into a continuation. So we like flags.
Oh,
The
yeah.
flag pattern is the beginning, is the confirmation of an impulse. And it's also the beginning of a breakout. It's the beginning of a breakout because now you're in a range, you're in a zone, you just bouncing in between the zone. You're not making any highs out or up or down. So we trap that. We trap that. I'm gonna show it to you. We trap it. And now we wait for a breakout. And understanding price movement also gives you insight as to where it's going to break out. So let's do it on the chart. Let's do it on the charts.
I get it. I get it. Fundamentals. The fundamentals.
Yes. This right here, understanding this price movement, you'll never be lost in the market. You'll always know what your next move is going to be. And this is also how you mitigate some of the shenanigans that the brokers like to play as well, right?
Because they use this as a tool.
Oh yeah, because they already know
They weaponize it.
that we notice, you know, that we trade certain ways, and most of the ways that traders trade is a setup for the broker. The broker loves it because kind of trading in the dark. Okay, so let's go right here. We're gonna do this downtrend now. So I got a downtrend. So if my trend is bearish, that means my impulse is bearish, right? So we selling. All we do, and we never trade against the trend. Always trade with the trend because that's your quality position, and you'll always be on the right side of price. Now, that's not to say you can't trade against the trend, but we go for quality trades, not quantity. Okay. So we have this bearish trend, which becomes our impulse, right? That after this trend here, this bearish move here, what did price do? It consolidated, right? So we basically consolidated right to this point.
Got it.
So I'm going to show you, even inside of the consolidation, price still moves in those three directions, even if it's just one candle. Because if your trend is bearish, all of your bearish, your red candles are impulses. All of your blue candles are corrections. Even if you go one at a time, it's still valid. It's still valid. And I'm sorry, my tool is striking double entries.
I do have trader view.
Yeah, because trading view, I like the tools, but sometimes this thing, it decided want to act up tonight.
I know the feeling. It just turned the daggone thing on, and it just it turned right off. Said nope, not today.
Mm-hmm. Okay, so we're gonna go up here. All righty. So remember the flag pattern. So this is your banner, just like the flag.
Mm-hmm.
And all we're looking for is a breakout. The breakout becomes the pole, whether it breaks out to the upside or the downside. And that's, of course, a flag, right?
Right.
Now, so prior to the consolidation, we were in a impulse. Prior to the consolidation, we were in an impulse.
Right.
After an impulse is a correction. So, but of course, this went into consolidation. But within consolidation, you can still see the correction, which is your bullish candle here. And it just go bullish, bearish, bullish, bearish. It's just doing that. It's bouncing inside of you.
So we're sideways.
Right. It's just sideways ranging. So what we'll do is we'll go toward the end and see what the last move is. The last move before it broke out, and it broke out on this candle, basically. This candle was, I guess maybe you can call it a breakout. It's right on top of the trend line. So, you know, it's right on top. I would just consider this one as a breakout. It's more profound. It clearly broke out, and that's what you want to look for, right? So, but prior to that, prior to this move here, because this move would be what? It would be a correction because our impulse is bearish. Right. So this upward move is a correction, right? So the candle prior to that was an impulse, even though it's just that one candle. Now, a lot of times what I do, I don't do the onesies. I just look for a downward pattern, whether it's short or long. So right here, where we had, if we have multiple candles, well, in this case, we got 3 bearish candles. 3 bearish candles right here. That's my impulse. And the next candle was a bullish candle. So that's my correction. And then the next candle was bearish. That's my impulse. And then we went into a correction and it broke out to the upside. So that's how you read that.
You want to make sure the candles are stacked, right? They're stacked and they trend. So because what my question is as we look at this and we have our impulse, our strong impulse, what's stopping a trader to look at the very next candle and say, hey, look, we about to turn up, right here. So the very next one, right after the first long bullish one, let's say actually, let's see, which candle's hard to say.
Would it be this one?
So no, not that one. Back a bit, right? No, that's too far. So you see where three bullish candles are right next to each other, and they have a long one. It's in the middle. It's halfway between.
Oh, right here?
Right there, yeah. So right there at that moment, at 1, 2, 3, we got 3 stacked up pretty good, and we're going bullish there. What's stopping a trader from saying, all right, here we go. It's time, right? It's time to jump in here. At which point do you say that enough of the candles are stacked enough that you can get into a trade? Now we have the 3-hour system that'll tell us that. But my question, if you didn't have it, how would we?
Well, the trend line, because you want to trap price.
Okay.
Right. So it started with this impulse, and then it basically ranged. But remember, you're not going to see any of this whenever you come and it's an active candle. We don't see the price action to the right because it hasn't happened yet. Right. So right here is the beginning. This bullish candle is the beginning of that consolidation, of course, because we can see that. So now you got this bullish candle right here, and then you have a bearish, and then you have a bullish, and it just kept going back and forth like that. So what you do is that right there is consolidation. Whenever you have a bullish candle, bearish, bullish, bearish, that's consolidation. So what you do is you would then take your trend line and you'll put it at the top of the wick. Whichever one that has the wick, the highest wick, you'll put your trend line there. That begins the blocking or trapping the move. It starts at that point. And you'll do the same for the wick that appears at the bottom, the lowest wick at the bottom. So this bullish candle, the wick is right there. So, okay, we got that covered with this trend line. And we just keep it going until price breaks out of this barrier. That's how you know. So when you get to this bullish candle right here that look like it's strong, actually it is strong compared to the other ones in this range, but it didn't break out. That's the thing. We wait for a breakout. Whenever you have a breakout from a trend line, a support and resistance line of any sort, that is a break of structure. Now, when you break structure, the game resets. You got to reset now. We got to identify another structure. And also, when you break structure, that is your indication that price is going to make a move. It's no more, it's no longer ranging. Now we're in some form of momentum at this point because structure has been broken. That makes sense?
Absolutely.
So always what we do is we respond to what price is telling us. That's all we're doing. And when we see what price is telling us, we begin to trap the market.
Got it.
When you trap the market, basically what you're doing is you are identifying areas where you know price is going to have a reaction. And the reason you know that is because it happened in the past. And price just repeats itself. 1 second, one second. Hold on 1 second. Let me run in this kitchen real quick.
Problem.
I will leapfrog. Okay. All right.
When you place your trend line, and maybe we're jumping because we were going to come to trend lines, are you placing that? So I always view them as box and whisker plots. Are you trading it at the end? You said the end. So you're on the left side, you're at the very first one, and you put it right way at the end. And sometimes those are outliers.
Well,
right?
no, what I look for, this one right here.
No, the one above it and below. So both of them are kind of using two different methods of trend line, I think.
This one?
Oh, no, the top one is doing the same one. No, you're doing the same thing with the top and the bottom one there. Okay, I see it.
Yeah, so what I do is I take the highest wick and the lowest wick. And I'm just trapping it. Because even like in this case right here, I didn't put my trend line at this wick up here because these other wicks are along the same area.
Okay.
Right? And I wanted to touch a wick. I wanted to touch at least 2 wicks.
Okay.
And long as it's a wick and not a body, because you do not want your trend line or structure, which structure is represented by a trend line, a support and resistance, a channel. Those are structures that traps price. And so you don't want the body of the candle to extend out of that, because if it does, then it already broke structure. So now you're looking for a new low or a new high.
Got it. Put it on you. Got it. And hit 2.
At least 2 for a bona fide trend line and a bona fide support resistance. It needs to connect with at least 2 wicks. Now it could be more, but it needs to be at least 2. Okay. The more it does hit that area, the stronger that area is. So I'm going to show you that. So now we got price boxed in. But as I was mentioning, within this range, it's the beginning of the flag. So what this tells me is price wants to go back into a downward trend. That's what this tells me. Right? Even though it broke out to the upside, that's because before this breakout ascended, we were in a correction. I mean, impulse right here, and then from this impulse, it did a correction and it continued up and it broke out of the zone, broke the structure, went up, and then it dropped. Then it dropped. But the flag is what confirmed to us that it was going to drop. It's the confirmation. Now, as far as how we trade this, we were when you're in a zone or consolidation, we always wait for a breakout. You never trade within a consolidation. So you wait for it to break out. And if the trend is bearish, we only looking for sales. So if it breaks out into a buy, hey, we fine. We ain't getting in that anyway, right? We're going to wait for it to drop. We're going to wait for it to drop. And I'll show you how you can determine how far price is going to go before it drops. Okay.
Okay. Are we saying when it's bearish, we're looking to sell, right?
Yes.
Sell.
Yes.
When it's bearish. Okay.
And buy when it's bullish.
Buy on bulls.
Yep. It. And freeze on consolidation.
Got it.
Freeze on consolidation. We do nothing.
All right, I get that. Okay.
Okay.
Yeah, because I would have been like, okay, that's time to buy right there. It's breaking up.
Right, but it did break up. Yeah.
But no.
Remember structure. We create the structure with the support and resistance line, with trend lines, with channels. We create the structure. Even this moving average is a structure. And in the triple arrow system, we got structure all over the place in triple arrow. So we have clear indication of what price is doing on the triple arrow. If you didn't know anything about structure and price action trend lines and where's price, right? If you didn't know that, the triple arrow system provides that, but there's still a disadvantage in my opinion because you don't know the backstory. You know what I mean? Yeah. So that's why I like to start here to give you the backstory, and then it makes it even clearer on the chart. And
this continues to cycle through, cycle, and restructure itself along the way. So it's alive. It's alive.
Absolutely. I like that. It's alive. That's so true, Jason. And what happens is when it breaks out, if it breaks out to the upside, it just starts to create a higher high, right? And it'll go to a certain point. If there's a downtrend, and then it's going to drop back down. If it breaks down to the low, it begins to create a lower low, right? See, prior, if it broke out, like in this case, it broke out to the high. So this candle right here was really the breakout candle, which was higher than any of the candles inside of the range. Higher high. You see what I mean? So it broke that structure. This structure is still it always exists because now this becomes historical data that we're going to use moving forward. We can identify this area here as an area where price struggled to get out. Price reacted in this area. So when we're buying and selling, we can now use this area as a TP area where we can take profit. This is sauce. Get the sauce. Get the sauce. That way, this is how you know where you are in the market at all time.
Oh, so the consolidations allow you to set your stop loss, TP,
Absolutely.
Take profit areas.
Now you're talking.
And that's where our triggers, where we set our triggers.
Yes.
All right.
Now, I primarily use it for TP, but you can certainly use it for stop loss too. And I'll show you how to do that. And again, on the system, the triple arrow system, it's just clear. It's just like, I'm telling you, it's like the GPS. I can go anywhere in the world now, and I know I'm not going to get lost. But there's a difference and knowing how to get to point B from point A just with your intellect. You know what I'm saying? It's good to have that assistance, but what it does is it doesn't. It's in the case of trading, it's a disadvantage if you don't know the history, if you don't know why it's doing what it's doing. I appreciate that you're telling me to go to the corner and make a left, and then the building is right on the right. I appreciate that, but why this route?
Right.
You know, why I couldn't go the opposite and maybe circumvent? I mean, you see what I'm saying?
No, I know exactly what you're saying, because every time we follow that daggone gypsy into the city, we end up on 34th Street, you know, sitting you know, in the middle. We can't. I mean, it's good. It's gonna get you there.
It's gonna get you there
eventually.
Right. And
But,
you say, well, could there have been a better route?
Yes.
You know, you start thinking, and absolutely it is. So yeah, the backstory, the history is very, very important. So now, with all of that being said, we can clearly answer these three questions that we must answer every time we go to the chart. Any chart we go to, we want to know what is price doing right now, right?
Right.
So if it's a downtrend, we already know what the impulse is selling. So where am I? If I am right here, well, let's go in the middle. If I come to the market on this candle, my question is, where am I? Well, I am in a continuation right here, because I have my 3 hours, my 3 candles, even if it was just this one bearish candle, but I have 3 candles. That's a continuation because I know my impulse is bearish, right? So I'm only looking for sales, right? So the question becomes, well, why wouldn't it's under the 50, we're in seller's territory, why wouldn't I take the next trade? Well, we're in consolidation. You trap the market, first of all. It didn't break. It needs to break this structure. You know what I mean? That's why it's important to trap the market so that you can clearly see what price wants to do. Once you trap this market, you can clearly see that price don't want to break it. Price ain't trying to break it yet. It ain't trying to break it yet. Even here, it ain't trying to break it yet. But it was until around in here, it started picking up some steam and it broke out. So we always wait. And here's the other thing. At this point, we would have already identified the fact that we were in consolidation. So we know we're waiting for a breakout anyway, because it's consolidation. So we would never take the next trade because this candle didn't break out.
Right.
It needs to break out at the bottom of this trend line and close, not a wick. See, this here is a wick. This candle here broke out of this trend line, but it didn't close above it. It pulled back and it closed below the trend line. So it didn't break it. A break is constituted by the body breaking the structure, not the wick.
Okay, breaking the body.
The body
breaking
breakout is constituted by the breakout of the body. And so, in other words, the body has to close below or above the structure.
And so the body closes. Just explain that a little bit to me there. The body is closing, meaning it's coming over that trend line. That's what we call closing.
Right. And it closed. Like
close out that wick. Close out that trend line.
That's right. Not a wick. The body.
Trend line. Okay, I'm gonna have to play with those terms a bit because I keep hearing that. Closing out the trend line, then the breakout. Okay.
Yes. So the wick is where price tried to go. That's what a wick represents. When you see these wicks. Now, wicks tell a story. Wicks tell a really good story. Because what a wick does is it tells you where price wanted to go. It also is an indication of struggle, right? And where price close is the body. So you have I'm gonna make this attempt here to draw a candle. I'll draw a candle. Okay.
Nice.
So now, overspoke. Okay.
Yeah,
Be nice.
no, that looks good. That's good.
Okay. So now this is a candle. No wicks. This is a full body candle, right? So if the candle, this is a full body candle, and of course now you have a wick. A wick, right? And then you have a wick at the bottom.
Yeah.
Okay. So now, if price close, my wick is crazy over here. If price close, right? So let's say this is price. I need to activate this drawing tool where I can use it like a pencil and without
the lines.
Mm-hmm. Yeah.
Okay.
And let's connect this a little better. You get my drift. Okay.
I get it.
So price is in and around, right? This is the candle, it's going up. Now, let's say price close here. Well, let's use a horizontal. Let's say price close right there, right? Okay. Price close right there. Okay. Now, we are looking for a bullish run, and we're buying. Okay. And price close right above this line. Yeah. So and let's say that was a trend line, support, resistance. So it broke the structure. The reason being is because some of the body has extended beyond this support line and closed.
Right.
So now, before that happened, this wick had already formed, right? The wick had, in other words, the candle went up to this level, this point, the top of the wick. And then the selling pressure pushed it back down to this point where it closed. So from a structure standpoint, it broke structure, which tells me that price still have a strong momentum to the upside because it broke the structure.
Right.
That makes sense?
To the upside. And obviously the more bodies that have that structure, it moves it up. So it moves that trend line up. Yeah. And it strengthens it.
It strengthens it. It strengthens it. But this wick tells me, like, if you have a long wick, like you have a let's move over something.
Got an outlier.
Yeah. So let's move up. You have a long wick. Now this is one of the benefits of the wick. Now if you have a long wick, right, and the wick will tell the story. Also, did I mention to you the Bible, the Candlestick Bible? But this inside of the Telegram group. You definitely want to study that because it really educates you on different types of candles and what they mean.
Oh, cool.
It's very informative, very informative. And when you're able to identify those candles, you can now determine what price you want to do. Because the whole thing as a trader is to figure out what does price want to do. Right. And whatever price want to do, that's what we want to do. We just want to follow price.
Price and the broker.
Yes, absolutely. Because the broker is controlling this whole movement deal, right? Okay, so now we have a bullish candle. This is a bullish candle, right? And we have a wick to the downside of the bullish candle. So what this wick, and it's a long one. What this wick to the downside is a reflection of selling pressure. So in other words, sellers try to push this price down. And it went down. This is considered a long wick. So the sellers went to push this price down, but the buying pressure was stronger than this push down because it pushed right back up. The buyers pushed it right back up and it closed. Well, it closed up here. So it pushed it. First, this candle was down here because that's where the sellers was pushing it down. Buyers pushed it all the way back up, and maybe a little wick here, maybe a little wick right here. Okay. So now what that tells you is buyers are much stronger, because just imagine how much buy-in pressure it would have had to take to push this price that was down here all the way up, and even extended up to this point, and then it just came back, pushed back down, and closed here. So when I see wicks like that, that is a strong indication of what? Buying pressure.
Starting to connect those dots. Good. It is a box and whisker part. We talk about the quarter one, quarter two, quarter three medians. So it's just like that. It's a normal distribution with standard deviation. So we're going upside, downside, and we can see that happening with buyer, seller, power. Okay.
Right.
And then length also means too. Yeah.
The selling and buying power is indicated by wicks and large candles and engulfing candles. We are so far from weeks to topic.
What's that? I'm sorry.
No, I was just saying we are some advanced training right now. For
real. My bad.
No, fine, because actually it's me, because I just get to going and.
No, that's good.
You know, I love it.
Yeah.
But, so understanding the price action, how to determine where you are, impulse correction, continuation, and candlestick behavior will always let you know where you are, what price want to do. Remember, the number one question that we want to be able to answer is, what does price want to do? What does price want to do? We're not going against price. Price is king. We're going to follow price. In order to do that effectively, we got to understand what these candles are saying, what these wicks mean. You know, different types of candles. Like we have dojis, for instance. And then we're going to get back on time. I promise. I promise.
This is good. It looks like, I forget what that line is called.
Which one?
I can't. The yellow one.
This, the 50 moving average. It's a simple moving
average, right? The moving average. It kind of gives us the idea of flow. So we talk about flow.
Yes, and it is a trend indicator. Yep, and it's the average, you know, average 15 candles. Okay, so you see, like, oh, why are you doing these double things? This slows me up. Okay, so you see inside of this box here, we have a couple of dojis. A doji, this is a great example of a doji. This is a great example of a doji.
DOGI? DOJI?
DOJI. And a doji is a reversal candle. It's an indication of a reversal,
Ah.
a change in direction. So if I have, you know, little bearish run going, and then I start seeing multiple dojis, that indicates to me that we're about to go uptown.
Okay.
If I'm buying and I start to see a couple of dojis, like a candle, then a doji, then a candle, then two dojis, that's an indication that we're about to go downtown.
Okay.
Okay. And it's typically within, when you see a doji, that is not a hard number, just know it's coming soon, but it's typically within the next three candles that is going to be the opposite direction.
Okay. Next three candles.
Doji. Yeah. Real powerful candles. Real powerful candles. The most powerful candle is your engulfing candle. Your engulfing candles. That is the strongest reversal candle. So when you see an engulfing candle, trust and believe we're about to go in the direction of that engulfing candle.
And what show me the engulfing ones.
Yeah, I love engulfing candles. You can just trade engulfing candles, but we're gonna stick to the plan. Again,
wait, where are they at? Just show me that real quick.
Okay, let me show you real quick.
I'm seeing the dojis. They're tight. They're really tight and tiny.
Engulfing candle right here. Now, the criteria for an engulfing candle is okay. So I know it went over on this one, but it's this short candle right here, this bearish candle right here, and this bullish candle right here.
Okay.
That's an engulfing candle, and it's a bullish engulfing candle. And the reason being is because the previous body of the candle can fit completely into the body of this bullish candle. It engulfed it, right? Only the bodies, we only concerned with the bodies with engulfing candles. And the candle, the big candle, the one that's engulfing the small candle, that candle determines the direction that price wants to go in. So if I have a bullish engulfing candle, what that tells me is price wants to move up. We still moving up. We still moving up. Now, when you see a bearish engulfing candle, same criteria, but it tells you price wants to go down. So we have a bearish engulfing candle right here. You see that?
The whole candle fits inside.
That's right. The previous body of the candle fits completely inside the body of the engulfing candle.
Only the body to the body, not the whole thing, including the wick. Just body to body.
Yep, body to body. Body to body. So you see that right here. Now, this is bearish.
But they're opposite. They have to be opposite of each other.
And they have to be opposite. Absolutely.
Because I'm looking at a couple that fit inside, so yes, it would be opposite.
Yeah. Yep. Absolutely. I'm glad you mentioned that. They have to be opposite candles. And the candle that's engulfing, the dominant candle, that is your directional candle. That tells you where price wants to go. So if I see a bearish engulfing candle, guess what? I know price is about to head on downtown. And it's usually within the next two candles that it goes down. Now, how far down it go? Of course, we use previous support resistance to determine that. Okay, because it doesn't have to be a long run up or down. So in this case, you know what, Jason? I went straight into advanced training here. I'm not gonna do that to you. I promise you. I promise you. We're gonna get to the chart. We're gonna get to it. Okay, so this here is consolidation.
Okay.
It's consolidation, right?
Right.
So
up, consolidate, continue. All right. So impulse, I see consolidation, continuation.
Right. You see that breakout. It broke out of this top area here to the
It was short-lived though.
yeah, and that's the thing. Some of them are long-lived, some of them short-lived. But from the standpoint of how to get out of a trade, position yourself for like this bearish engulfing, and when do I get out? Well, you look left to the previous consolidation, the previous area where price struggled. Price struggled in this area. It just ranged in this area, right? So anywhere in this box can be your take profit.
Oh.
You can go to the bottom of the box or inside the box, because what that tells me is price is going to go back to this area. It may consolidate again, or it may break out of this area, but it's going back to this area. It's going to go back to where that wick is. And you can back test it. It's like clockwork. So if I saw this bearish engulfing candle right here, I'd go ahead on and get in. Now I would get in on the next bearish candle because I'm a quality trader. If I just gotta wait, I'll wait to get the quality. So when this candle closed right here, I would take my trade, because that confirms this bearish engulfing going on. It confirms the move. I'm gonna take my trade and I'm going to get out the trade. I'm a TP shy of the bottom of this box. Shy. I don't never go straight on the price.
So when we say get in a trade, I think we use you get in a trade unanimously, where everyone's like, get in a trade, get in a trade, get in a trade. And what you're doing there is you're selling. Right?
Right. I'm selling.
Okay, we're selling there.
Bearish engulfing. Right. Yep, good question. So I'm selling. Now we are on the monthly chart, but this applies to any time frame. Of course, the difference with the higher time frame is the pip amount. The volume of buy and sell orders in a higher time frame is much higher than on the smaller time frame. So the pips count can be a whole lot larger. So in this case here, I would have gotten into the position. I would have executed a sale right here. I would have taken it down shy of the bottom of this box. That's 1,126 pips. So
you're selling all the way down to your limit. Boom.
And get out. I'm gonna put my TP when I place the order. I'm gonna because you will already identify that when you place your order. You already identify where you're getting out. Put that price point in the TP area, and now the market is gonna take you out once it hit it. And did it hit it? Absolutely. Because it was a previous consolidation. Now remember this, price always moves from one consolidation period to the next, or area to the next. Price always moves one consolidation area to the next. Now, did it hit it? Absolutely it hit it. Right here. Out the trade. Done. You can back test that. It's true to form. So again, so even with this bullish engulfing candle, I'm gonna look left. What am I looking for? I'm looking for the previous consolidation, right? Previous consolidation, because that's going to tell me where price is going to go, right? So sometimes you got to zoom in or out so you can get a good view.
Now, do we see a doji here? Is that the doji?
No, because you don't necessarily have to see a doji with the engulfing candle, because the engulfing candle is a reversal candle in and of itself. Now, most of the time, you'll see a doji before an engulfing candle, a few candles before it. So like here, for instance, you got a bullish doji, which is an indication that, now this don't always happen, but a doji in and of itself tells you that a reversal is coming. Most of the time, it's an indication that an engulfing candle is about to pump, most of the time. And that is going to be bullish, because this is a bullish doji.
Right.
If it was bearish, it'd be bearish doji. Right?
Bullish. And so we got two more. We're talking about doji. I'm just making a connection. You got three sitting right next to each other. We passed it. It's right there.
Here?
Yep, right there. So that is three bullish dojis.
Yes.
Right?
Yes.
Tight. The next three candles, powerful candles, are bullish. There's a reversal. There's no reversal here, but it's.
Oh, remember now, look, you see it. because you got your doji, right? So
Right.
the doji in and of itself, aside from an engulfing candle, the doji is telling us that one, we still going up, but that a reversal or a pullback is coming. That's
Okay.
that's if
Got
your impulse is bullish.
Hold back.
It's coming.
Okay.
And that's what happened here.
Okay.
See that candle? Those candles, that was your pullback right there.
Facts.
So that's if you want to trade candles, because that's a trading methodology as well. What I recommend is understand what it means in relation to your overall trading methodology. You know what I mean?
Right.
So we at this bullish engulfing candle, we know that price is going to go up. Now we have to look left to determine how far are we going to go before we get out. And what we look for is areas of consolidation. That's what we're doing. Now, areas of consolidation can be 2 candles. It could be multiple candles. Anytime that you have, oh, why are you doing that? So this is consolidation. Is also what we call like a pivot, because it reached this point and basically it dropped. It reached a point and it dropped, and it's like a pivot. But even in the pivot, you see small consolidation, even if it's just 2 candles. It was a reaction. That's what we're looking for. So it reacted here. It reacted here. Now, when I look at the close of this bullish engulfing candle, it's pretty much in the middle of the consolidation area. So I would look a little further out and to the next one. So now I'm up in this area. I'm up in this area. Whenever I see small candles, I know that that's consolidation.
They're usually smaller.
Yeah, these itsy bitsy candles, those are consolidation. Low volume candles, and you have 2 or more low volume candles, that's consolidation.
Got it. That's great indicators.
So now I'm back at this position right here. I want to get in this trade. So I'm going to take this trade. I'm going to take a buy on here. I need to know when I'm going to get out. So I'm looking at this area right here, right? And what I would do is I wouldn't take it, me personally, right? I would take it to the beginning of the bottom area of the box, me personally, right? Because I know wicks can play around and wick you out of your trade. So that's how I like it. I want to just get my pips and be done with the games.
I hear you.
Done with the games. So if I did that, I would have gotten slightly on the box, the bottom. That's 888 pips. Now, would it have made it? Absolutely. Right over here. Right over here. I would have got my money and I'd have been a happy camper.
So you find that next closest level at
Yes.
at the horizontal.
Right. Yep. Because again, price moves from one consolidation period to the next. Now, with all of this, we're going to go to the triple arrow, and the same thing happens on the triple arrow. It's no different. The only difference is that you have the support resistance is already identified. Where I looked in and identified is already done on the triple arrow system. The trend, where I identify the trend with higher highs and higher lows. If you have higher highs, like this is a high, that's a bullish candle, it's a high. And then this is another bullish candle, but this candle is higher than this candle. That's a higher high. Right?
This steps up.
Yep, it just steps up. So you got a higher high, and when you have higher lows, that is a trending market. That's a bullish trend. So that's how you identify the trend without indicators. I want to show you how to, rock the charts without indicators. So when you work with your indicator, you working with the indicator not working with you.
Right.
You know what I mean?
Yeah. Yeah, taking you for a ride. And you're
Right.
riding it, or it's
Right.
taking you
So,
for a ride.
right.
And then
You're
it
going to be
takes you
Scorpion Trove.
right off that price action.
Right off it.
Right off it. It'll take you right off.
Over the cliff. So higher highs and higher lows is a bullish trend, basically. So you see where you have your bearish, which represents your low. So the low was right here. The next low was right here.
It's a higher low.
So it's a higher low and it's a higher high. So that is a bullish trend. And that's how you know that now, because you identified the trend, you automatically know what your impulse is. Your impulse is bullish because it's always in the direction of the trend. Same thing applies for a bearish trend. You have lower highs and lower lows. Market is going down. So look at right here. You have a high right here. The next high, because your high is always represented by the bullish candle, right? So your next high is lower than that previous high. So you have lower highs and lower lows. So you got a low right here, right? Where candle closed at the low right here. And then this candle closed at the low right here, which was lower than the previous low.
Lower low. It's lower
Yeah.
low.
So you got lower highs and lower lows. When you have that, that's a downward trend. And like I said, I love the 50. I use it for everything. When my bearish candle is closing below my 50, I already know I'm in seller's territory. It's time to rock and roll.
Moving average 50.
You know, I just thought about
lower. Okay.
So now we're going to go to the triple arrow. So with all the notes you have, and of course the recording, you can actually trade without your indicators. Now I'm an advocate for the triple arrow. I am, because hey, it's great. But you now are in the driver's seat of the indicator. You see what I'm saying?
Yeah.
Now we're going to go over to, you have any questions we talked about here before we go over there?
Nope. It's a lot of information, and what I've got to do is put it to practice so that I can, make it real. So
yep, that's it. So what we're going to do is go over here, and we're going to share. Oh, so let me pause.